Well, good morning, everyone, and thank you for joining this Vietnam Opportunity Fund update. The format for this morning's call will be a presentation from the VOF Capital team in Ho Chi Minh, followed by Q&A. And you can submit questions at any time by using the Q&A button at the bottom of your screen. The long-term performance record of the trust continues to be strong, evidenced by it topping its subsector for NAV performance over the last 10 years to 19th of February. It has also seen its NAV meaningfully outperform the VN index over 1, 3, and 5 years to the end of 2023. Despite this, the trust's discount has widened and is currently sat at over 20%, having been 14% at the start of 2023. However, this is not unique to VOF, as we have seen discounts widen across the sector, but it is against the backdrop of a supportive buyback, and we've seen the trust repurchase 1.9 million shares in 2024 so far. So with that, I will hand over to the VOF Capital team in Vietnam.
Good morning and welcome to the VOF Capital Vietnam Opportunity Fund 2023 update. We're here to wrap up 2023 and importantly, as we start 2024, the year of the dragon here in Asia, what the outlook for 2024 is going to look like. My name is Khan Vu and I'm joined today by Andy Ho, Chief Investment Officer, and Mike Kokolari, Chief Economist here at VOF Capital. So today we really want to focus on three things. One, a wrap up of the economy and importantly, what the outlook for 2024 is going to look like. Two, a little look at the stock market, how it performed last year, and importantly, what's going to drive growth for 2024. And finally, wrapping up, looking at the VOF portfolio, looking at performance, and again, importantly, what 2024 has in store for our investors. So, Mike, I'm going to turn straight to you here. Recap again, what are the key drivers of Vietnam's economy?
Yeah, so in Vietnam, we have these three intertwined growth drivers. The first thing is that Vietnam is following the so-called East Asian development model, which just means we focus more and more on manufacturing, and particularly manufacturing exports that we sell to customers, especially in the US. And that is helping to boost people's incomes. As incomes go up, that's one factor that helps to boost the middle class cohort of the citizens in this country. Also, when people move to the city, their incomes go up. So those two kind of have an intertwining between them. And what is going to assure that we're able to continue on this process of more and more industrialization, more and more manufacturing being a bigger and bigger contributor to the economy? Well, that's the way that the geopolitics is shaping up in the world right now. Particularly the trade war, as factories either move from China to Vietnam, or in fact, companies set up factories in Vietnam instead of setting up in China. That kind of assures this long-term pattern of more factories coming here, boost people's incomes, helps to boost up the emerging middle class. That's kind of the overall picture. And how that relates to the immediate what's happening in the country last year and this year is that because the manufacturing is becoming a more important part of the economy, we're subject to what happens in the rest of the world. And what you can see on this slide is that we had a really, really strong year back in 2022, and also during the COVID pandemic as well, in manufacturing products that were sold, again, particularly to consumers in the US, but also to consumers in the EU and the rest of the world. We had a really strong year back in 2022 of manufacturing and exports. And part of the reason for that is because what was happening at that time, if you cast your mind back, is that was when there was these COVID disruptions, supply chain disruptions happening. And so companies were ordering a lot of products because they were afraid that they couldn't have enough to sell to the consumers, especially when the economies were reopening after the COVID had finished. And so we had a really strong year back in 2022. And then basically last year, 2023, the companies, it ended up that a lot of companies, especially in the US, had too much inventory. So they slashed their orders, and that meant that our exports actually declined last year. It's the first year that Vietnam's overall exports declined in the first time since the Great Financial Crisis. But we can also see on the slide is thankfully the whole situation started turning around towards the end of last year, and now we're actually picking up. First month's figures for exports were again quite strong in January. We happened to just put out a report about that if you want to know more about the details. But the good thing is that the situation that was dragging the economy down last year has really come to an end, and now we're back on an upswing.
And that's good news, right, Mike? Yeah. But specifically, what is driving that export rebound, right? Is it traditional stuff or what?
Well, about a third of Vietnam's exports now are high-tech products. And what you can see on this slide is that, and this is a slide of what's happening, on the left you see the global picture for PC sales. And at the beginning of last year, PC sales in the world were declining at about a 30% year-on-year rate. And what you can see on the slide is by the end of last year, it had started recovering. And again, when we look at the initial data that we have for this year, that trajectory is continuing. And therefore, it's not surprising, you see on the chart on the right, that since global PC sales are recovering, our exports and our manufacturing of making, not just PCs, but other consumer electronics, smartphones have started to recover now, particularly in the very end of last year, beginning of this year. And so that's going to be kind of the basis for the recovery in the economy, or the acceleration in GDP growth. I shouldn't say recovery. Last year was okay. We're 5%, so we go up to around 6.5%. But the basis for faster growth this year is more manufacturing and exports, and particularly driven by high-tech products.
And that's looking outside, that's looking externally. What about internally? I mean, there are other things that have been happening here that are stimulating the economy.
So while the biggest sort of external factor that was influenced is the whole export story I just talked about, what was happening internally, both last year and will impact the economy this year as well, is we had a big increase in interest rates in Vietnam. And the reason why interest rates went up, one of the main reasons, is because if you cast your mind back again, we think back to what was happening in 2022. 2022, the value of the US dollar surged by as much as almost 20%. And so Vietnam, they're very concerned about keeping the value of the currency stable. That's largely for the benefit of foreign investors, because they want to, I mean, we believe that what part of their strategy is in helping to attract FDI is to keep the exchange rate stable. And if you look those last couple of years, Vietnam's currency was in fact much more stable than the rest of the region. So that explains why they hiked interest rates. And now that the currency has stabilized, you can see here that they have slashed policy interest rates, and banks have also slashed both the deposit rates that they pay and the interest rates that they lend out at.
So on that point, Andy, we've seen this dynamic, right? Depositors no longer are earning those really high rates that they were perhaps 12, 18 months ago. What is it today? What could you as a depositor get today, and what would motivate you to keep money in the bank or not?
Yeah, I mean, you got to look at the numbers, right? 18 months ago, they were getting 9 to 10% deposit rates on local currency. Today, those term deposits are maturing, and they're getting about 4 to 4.5% today. And with inflation at what, 3.5%? It becomes less and less interesting for them to keep the money in the bank. So they're looking at alternative assets in Vietnam, one of which is the stock market, second of which is the real estate market, and obviously gold is always available. And keep in mind, Vietnamese investors or people and companies are very restricted when it comes to investing abroad, right? And so their alternatives are really what's available in Vietnam.
Right. Actually, one of the things you mentioned, that leads into another point, which is, so I'd gone through the story talking about how the exports and the manufacturing were weak last year. One of the consequences of that is a lot of people got laid off from factories, and then that made their consumption was kind of low last year. That was another factor that was weighing on the economy. But the other thing that was happening, and it relates to what you just mentioned, was that the real estate market was slow last year. And as you said, with interest rates lower, that should be one factor that kind of helps to support the real estate market this year. The weak real estate market weighs on construction, obviously, but it also weighed on people's on spending last year. So we have this kind of interesting dynamic dynamic where, both at the low end, which was previously getting hurt by layoffs are finished now, and at the high end, that was partially getting hurt by the poor sentiment in the real estate sector, and that's kind of going away now. Both of those sectors should be supported by.
So let's wrap it up in terms of the macro fund. I mean, you talk about manufacturing, you talk about exports, you talk about this retail consumption. What does 2024 then look like for us? Yeah,
so I think we'll go from 5 and a bit GDP growth last year to between 6.5% this year. But I think the important thing to mention, and this will come up also later when we talk about the earnings growth of companies, is that all of our assumptions, both about the GDP and also about the earnings growth that the companies are likely to achieve, they're based on very realistic assumptions. So what you can see on the slide that I have up there now is that, particularly in the right-hand corner, on the right-hand column, these are sort of the long-term growth rates of things like manufacturing pre-COVID. So you can see that it used to be the case that manufacturing, or normally in Vietnam, manufacturing grows by sort of double digits. This year, we expect manufacturing to grow by about 8%. So that's a healthy number, but it's not like an outrageous kind of overly optimistic forecast. So when we say that we're expecting 6 to 6.5% GDP growth, it's based on very realistic assumptions. And likewise, you can see for consumption, real retail sales growth versus kind of historic norms. These are all kind of very realistic assumptions, I think.
Thanks. So we're looking here, Mike, if I say stable, predictable, back to normal, which is really what, as an investor, you want to be seeing in a market like Vietnam. So Andy, turning to the stock market, likewise, the stock market staging a recovery in 2023, difficult year 2022. But really, if you look at this chart here, it's sort of a tale of two phases here, two stages. Talk to us a little bit of what happened in 2023 in the stock market.
Well, I mean, big picture is that we did deliver over 11% return for the VN index. For the capital market component of the VOF portfolio itself, the component that's related to the listed equities of VOF, we deliver over 20% return. And the total NAV of VOF for 2023, we deliver over 17% return. So on a relative basis, looking at the market, VOF did relatively well. It's very positive for VOF in 2023, as well as other funds in Vietnam as well. But if you look at this chart, you're right. There's quite a bit of volatility, right? The first half of the year, and I think Mike alluded to, we probably need to summarize that a bit, whereby consumer confidence or sentiment was quite weak because, one, the layoff from the low income earners because the export businesses were laying off. Two, the real estate market activities were more or less frozen, and that reduced the sentiment because most Asians, including Vietnamese, become very wealthy on the back of real estate. And that gives them a positive level of sentiment when real estate values go up. The third part that reduced the consumer sentiment is interest rates was high. Interest rates at 9 to 10%. Like I said earlier, people rather have money saved in the bank. That has changed a lot in the sort of second half of 2023, and those are one of the few factors, including another factor that drove the stock prices up to a high in mid-August was the listing of VinFast.
Right, which is what, the electric car company, right?
Yes. Well, Vingroup is the owner of VinFast, and it's a great brand in Vietnam. Vietnamese people are very proud of this brand, and the fact that you can see a Vietnamese company listed on the U.S. stock market was great. So the lead up, the market going up to the peak in mid-August, it's really the enthusiasm from domestic investors to enjoy this exciting listing of VinFast. And how they participate is to acquire shares in Vincom, which is VIC, and Vincom owns over 50% of VinFast. So you can see that, and Vincom makes up a big chunk of the VN index. But once the company lists, I believe it lists on the first day at $23 billion and closed at around $85 billion in value, so it's quite high. So once the good news comes out, people started to take profit, and that's why you see a reduction of the index. And if you look at VinFast itself, it went up to as high as almost $200 billion in value over a period of 2 to 3 weeks subsequent to listing. Well, today it's value around 12 to 13 billion, so it's come down a bit. And I have to admit, the stock market probably went down because the valuations have come down. But that's one of a few factors that
because it's
were in play.
not just about an electric car company, although it's exciting. There are fundamentals that have been driving this market. And if we turn to this idea of the earnings growth, again, this chart here shows you that as we march towards the end of 2023, earnings growth is strong. What does it look like? Summarize that, and then what does 2024 look like?
Well, if you look at the earnings growth of 2023, it was flat, right? Yes, the latter part of the year, it did well, but it was flat for the year. And that is also another factor that contributed to the volatile stock market movement in 2023. For 2024, we've talked to the research team at length, and I think we're coming in around 10 to 15% EPS growth for the year. And if you hold the multiples constant, we should see a growth in the index to the tune of 10 to 15%. But we are trading around 10 times forward PE. So it is low. It's around two standard deviations below average. So I do see a possibility of multiple expansion in conjunction with EPS growth. So we can see a healthy gain.
So for investors, institutional investors looking at a market like Vietnam, you're getting that growth, back to normal, reasonable levels between 10 to 15%. At the same time, valuations are very attractive. Right? So that's quite a unique feature for the market relative to the region. And if I recall, the stock market in 2023 here, one of the best performing in the region. So then within that, it's quite interesting, right? Because we talk about this recovery in PCs, the semiconductor, President Biden came to visit Vietnam late last year. That sector, those sectors related to technology have been doing very well. But yet if you look at the key contributors to market performance last year, it seems like it's more the traditional sectors that are really contributing.
Well, unfortunately, the exposure of IT within the VN index world is quite small, because we really have one big company called FPT. While the real estate and financials have many, many companies that make up the VN index, or that make up the Ho Chi Minh City Stock Exchange. But FPT alone did very well. We've invested in this business in 2018, 2019. We've had a meaningful stake in this business over the years. And with Biden's visit a few months ago, an emphasis on semiconductor investment for the long run was put on the table, a commitment by both countries. And I do believe, or we believe, that FPT stands to benefit tremendously from that. When we invested in FPT, it was about $1.5 billion in value. Today, it's about $5.5 billion in value. And there's no reason to think that it cannot go to $10 to $15 billion in the next 3 to 5 years. Now, granted, it has to execute. And one of the key things that FPT has done well over the years is to recruit, train, and retain great engineers. And you are going to need that for the semiconductor industry, as well as the artificial intelligence trend that we're seeing. And I think that's really positive. And you know what? Subsequent to Biden's visit, NVIDIA came back, and they also met with FPT and started to discuss some commercial relationships.
Certainly, really important companies. I think the other thing we want to mention around this is that it's not just technology companies that are benefiting, but we're seeing technology being permeating throughout traditional businesses and traditional companies as well. And we'll come back to that theme in a moment when we look at some of our portfolio. So Andy, we've wrapped up the stock market for 2023. I think we can summarize, it's going to be earnings will return back to normal levels. It's going to be driven by earnings, but valuations are very attractive. On the economy, Mike, you're saying that we're going to again go back to mean reversion, and the fundamentals remain there in the market. Turning to the portfolio, I guess, Andy, is that one of the characteristics of the VOF is that we give our investors long-term, we deliver long-term performance at low volatility, right? Can you describe what our strategy is and how we're able to differentiate and deliver on that?
Yeah, I think we focus on companies that have strong fundamentals and a good management team, a trusted management team, one in which can execute to a reasonable business plan. And we take a long-term view in these businesses because we are over $1 billion fund, And when we take an investment, when we make an investment, we deployed about 30, 40, $50 million. So we can't go into the stock market and buy shares. All you do is drive up the share prices, and that will go against your NAV. And when you start selling it, we just can't sell the shares. And that's not how we operate. So what we do is we negotiate our way into public companies as well as private companies, and we call it private equity terms in practice. And we also ask for due diligence rights. We look under the hood, we check out the financials, the legal, the ESG, we hire third parties to do due diligence on these matters. And then we negotiate with the sponsors to have veto rights or corporate governance rights. We ask for performance commitment to grow the business. And we also ask for downside protection in case of adverse conditions in a 3 to 5 year time frame, because we are going to stay in a pretty much illiquid position for the foreseeable future. And then obviously we also participate at the board level and help enhance the management team. And then over the next 3 to 5 years, we like to take the company public, continue to hold on to them as a public investment if they continue to do well, or take them to a trade sale. We recently sold the largest PET bottling business to Indorama. We made a very nice return. So our investment in the terms that we have, one of which is a drag-along rights, gives us option to either sell a controlling stake to a strategic buyer or take the company public onto an IPO.
And I think it's important to mention that, is that that's one of the things that differentiates, right? But if you look at our portfolio, 70% is enlisted. But we always talk about if you sort of change the point of view and ask the question, how did you enter these companies? 80% of our portfolio was entered through some private means. And over time, they're good companies, and we've held them, and they've become public companies. And in that, we talk about technology companies, but then there are sort of traditional companies in the consumer space. And the consumer space hasn't done particularly well in Vietnam in 2023 or recently. However, you've got
the phenomenon we mentioned
right
before.
of the consumer.
Now that's all clearing up.
But then we have companies like P&J, the leading jewelry company in Vietnam, in our portfolio, and they're doing very well. Talk to us about that.
I think you know my view on the consumer space. We have a great consumer story in Vietnam. We have 100 million people. They're getting wealthier and wealthier. And GDP per capita, like I said earlier, is about 4,200, 4,400, and it's growing. People have money. There's plenty of liquidity here. But on the supply side, to provision services, to provision goods, the competition is enormous. Not only domestic investors can provide food and beverages and goods, but international players like Nestle, Procter & Gamble, Unilever, they can also deliver goods and services to the Vietnamese consumer. So the consumer is benefiting. The competition is great. So it puts a lot of consumer-driven businesses at a situation where they have to identify unique selling points, unique selling advantages, all right, or unique selling proposition. And that has to be for the medium to longer term. In the case of P&J, we think they're quite unique in a sense that, one, they're the largest jewelry company in Vietnam. They have scale. Scale gives them the ability to have visibility to what the market wants in terms of design. They can change the design quickly. Scale also gives them the financial capability to back up a put option. So when you buy a jewelry product for your wife at P&J, in 2 or 3 years' time, when you have maybe financial problems in the family, your wife can actually go back to P&J, sell the jewelry that you bought and get back 70 to 80% of the original costs. Right? This is a cultural thing, but it requires the fact that the company should be large enough and have a balance sheet strong enough to be credible in terms of that commitment. Okay, and further to that, the technology and the data analysis that P&J uses is incredible. They're able to see which SKU moves and which SKU does not move, and then combine them in bundles to sell wherever they need it. And further to that, they can identify quickly if a product isn't selling and bring them back to the factory and melt down the gold or melt down the silver to produce new products. So the technology they're using enhances their ability to manage working capital, inventory, and finished goods in a way that's never seen before.
Yeah, and this is again, we're looking here in Vietnam at leading world-class companies here, and the important thing is for investors like ourselves, it's being able to be here on the ground and identifying that. During this year, we've made an investment, in 2023, not only have we exited in the private equity space, we've also invested in the private equity space, a technology, infrastructure, advertising platform, a company called Chiselon. Talk a little bit about that.
Yeah. So traditionally, when a consumer company wants to communicate to the consumer, they would go through television, through commercials, newspapers, advertisements, in magazines, etc. And now the mobile phone, the smartphone is another way to connect with the consumers. What Chiselon does is they have 34,000 LCD screens throughout the country in the elevator banks of office buildings and residential towers. And they have now created another channel for consumer businesses to communicate with the consumer, to their customers. And so they are the biggest provider of this channel, the LCD screens. They have 80 to 90% market share. So now the traditional channels is getting eroded, and people are spending, or consumer companies are spending more budget, more advertising budget on smartphones, as well as LCD screens in short videos, short content video, to get the attention of the consumer. And we believe that this is a good investment for the next 3 to 5 years, and it's got a great retail brand, so it can easily be listed and get the attention of domestic investors.
Which is sort of one of the characteristics of our investments. We look for, brand scalability, distribution, and so it's been a busy year, and 2023, but importantly in 2024. What are you looking at, Andy? And perhaps to help our viewers, we have here what we talk about sometimes, our sector allocation. How does that tie into the opportunities that we're looking for in 2024?
Yeah, so when we look at how we want to manage the portfolio, we have to construct the portfolio. So our construction of the portfolio leverages how we view each sector. And how we view each sector is our analysis. We have an in-house analysis of the risk-adjusted return for each of the sector as defined by Bloomberg. As we look at the risk-adjusted return, obviously the ones with the highest risk-adjusted return will get more attention, more exposure, and the ones with less will get less. And this is roughly a 3-year outlook, and that's how we look at each of the sectors. And if you look at this slide, what we're saying is on the solid red, that's where we are today. This is a direction of travel. For real estate, our direction of travel is to reduce the exposure. And for financials, same thing, to reduce the exposure. On the other hand, we feel that information technology, healthcare, we have 2 healthcare platforms now. We're the only investor that invested in hospital platforms and exited and made a nice return in the case of Hoàng Mỹ. Now we've moved on from that. Now we're on to platform number 2 and number 3, one of which occupies the Southern Territory and the other occupies the Northern Territory. But our view is that the healthcare space is very strong. It continues to grow. People are getting wealthier. They're getting older. They're getting sick. They're going to need good quality healthcare. We like healthcare. We like the other areas we like is the energy and the consumer staple space as well. But this slide shows you our direction of travel. We may not get there, but it certainly gives the team a direction that where we ought to focus or where we ought not to focus.
And just to wrap up this part, Andy, we've spent, it's been 20 years running this fund has been in operations. We've invested in over 200 companies, if I recall. Certainly 2024 would like to come out and share with our investors new investments. And now we're going to turn to Q&A for the next 10-15 minutes. I'll hand it over to our team at Kadan to start off with, but thank you for joining us this morning.
Andy, Mike, thank you. So we've had a few questions come in, and perhaps I'll start with one, and then Khan, I'll hand it over to you to take it from there. So the first one, could you give us an update on the dividend, please?
Thanks, Will. Andy, do you want to take that question?
Yeah. Earlier you asked what is some of the uniqueness of VOF, and I failed to mention that we are the only fund that pays dividend in Vietnam. We are committed to that. The dividend is roughly 2% of NAV. or if you look at it from a market price perspective, the yield would be around 2.5%. So the answer is yes, we pay dividend, and we've done so for the last 6-7 years. Is that right?
And I think it's a testament to the quality of the companies within this portfolio, right? That we're able to generate that income and sustain an ongoing dividend policy. I think, Will, you started this with comments around the discount, and in fact, one of the next questions here, Andy, I'll stick with you on this one, but we've got a question here around the idea that the discount is wide. There are things that we are doing to address that, the buybacks, the ongoing dividends, but this question concerns the valuations and the valuations of the unquoted holdings. And what are can you comment on the evaluations of those unquoted holdings, and how can we assure our investors that the valuations are being updated frequently?
Yeah, you're right. The discount rate has expanded a bit more than we anticipated. On the back of a few things. One is our NAV has gone up quite rapidly over the last 2 to 4 weeks, if you will. And as you know, our portfolio, roughly 70% is in the listed equities, and the listed equity component, we have some really good companies, and they've simply done very well over the last 2 to 4 weeks. And as a result, the market price hasn't caught up to it, and the discount has widened. We do have a few tools that we use to address this, one of which is the share buyback. And if I recall correctly, we spend roughly $40 to $50 million on the average over the last 11 years to give back capital to our shareholders in the form of share buyback, and we'll continue to do that. But the reality is that the NAV has gone up, and unfortunately the demand for the shares of VOF hasn't been as strong, and I think it has a lot to do with the pound. We quote the shares in pound, and the pound has been appreciating, and it'll probably continue to appreciate against the U.S. dollars if the U.S. government is thinking about decreasing
and
interest
Mike,
rate.
I mean, what are your thoughts on this? I mean, another question here is.
Yep.
Around that, we talked earlier about the interest rates. Vietnam really has been one of the first countries to pivot.
Right.
And the question here is your thoughts on where interest rates are heading, US, Vietnam.
Okay, good point. The U.S., I mean, we're not U.S. economists, but I think the consensus, we had a couple strong data points out recently. We had the strong employment number, and the CPI inflation was a little bit hotter than expected. So the expectation for the number of rate cuts in the U.S. fell from 5 cuts to 4 cuts this year. I actually think we'll have probably a little bit less, maybe two interest rate cuts. Something Andy and I talking a lot about. The Fed doesn't want to be seen as being political, et cetera, et cetera. And in Vietnam, inflation is sort of stabilizing around the 3.5% rate. I mentioned in my introduction to our seminar earlier that the value of the Vietnam dong has kind of stabilized. I do expect the dollar to soften a little bit. That's also part of what's going on with the pound. UK is also, inflation's been a little bit hotter than expected. Rates will probably remain high there as well. Therefore, long story short, I don't think we'll have any more movement on interest rates in Vietnam, policy rates. You may see the bank rates come down a little bit more, but the policy interest rates, Vietnam was one of the first ones to cut, and I think you will see other EM central banks now follow Vietnam's lead and cut rates probably this year as well, but not much more on the policy rate.
Thanks, Mike. Yeah, and I think one thing we didn't cover off, and the questions here has come off. We talk about, or you talked about, Mike, that there's just going to be this recovery in the economy. We're going to go back to the 6.5% GDP growth.
Sort of, yeah.
Yep. And Andy, you talked about that the earnings growth really is going to be very much a driver of the stock market and companies this year. Again, back to the long-term averages. But we haven't really talked about risks, right? What are the risks that you are seeing for 2024? And I think we'll take it both in turns. Mike, you can start, and then on to Andy.
So I would say that endogenously, internal to Vietnam, I don't actually see a lot of big risks. The way I'm thinking about the economy this year is it's almost like last year, if you want to think about the analogy of a ball, we were sort of pushing the ball underwater, and now we're sort of just getting out of the way. And I don't think the ball is going to sort of shoot up, but it will come back to sort of a more natural buoyancy type level. And I think that's going to happen irrespective of, just because things were depressed last year, sentiment with consumers was depressed, and now that employment has sort of recovered. So the internal situation, I think, just kind of goes back to the long-term trajectory. If anything could go wrong, it would have to be with the world. And Vietnam is, many of you may know, if you add up the imports plus exports, Vietnam is the country which is the most exposed to the global economy more than any country in the world. I'm excluding city-states like Singapore and Hong Kong. But if you look at our trade flows, we're very exposed to what happens in the rest of the world. You do sometimes still, the consensus is that we'll have a kind of a soft landing in the U.S. economy, which is our biggest export market. I also think that's likely given, we're having the lead up to the election. There probably policymakers want to kind of make the economy in a smooth, steady state, so they can keep the incumbent, administration. And so for that reason, I don't think we'll have a big implosion of the U.S. economy this year. But if that were to happen, again, it's our biggest export market, and typically when you have a big correction in the U.S., the value of the dollar goes up, and that would also be bad for Vietnam as well.
Thanks. So things look out there. Andy, what do you see for risks for 2024?
I think Mike mentioned one of, I always keep roughly 3 risks in the back of my mind. Mike mentioned one of them, which is the FX risk. But clearly, one of the key risks I'm keeping an eye on is the EPS growth, right? We're thinking about 10 to 15%. That's on the optimistic side. If businesses, if consumer sentiment doesn't turn positive and spending isn't there, we may not see EPS grow at that level, and that's a risk that I am concerned about and keeping an eye on. The other risk I do keep an eye on is, over the last 12 to 24 months, Vietnam has arrested a lot of people who have broken the law, from business leaders to government leaders. One thing they have learned is to sort of separate the individuals from the organization, whether the government organization or business organization. They separate it before they go after the individuals. And that has stabilized the market significantly when they make these announcements. But clearly the risk is that they continue to go after people who break the law. Look, the reality is if they've broken the law, they should be arrested. But we don't know it until it happens, right? That is a risk that we have to face. But I am relatively comfortable that the way the government's approaching it is very sensitive to the market volatility, and so they try to stabilize as much as possible.
Right. Thanks, Andy. And I think, looking ahead, these reforms and these changes and these rules that are going to come through, these are net positive for the market. There is this perennial question that I can see here being asked is, okay, we're doing all these great things. The market is evolving, it's changing. It's very wide now. There's lots of interesting companies. At what point do we go from frontier to emerging market? Is there a timing? What are the hurdles?
No, I think a lot of people want to see Vietnam graduate into the emerging market. And so we have a couple of indexes to look at. One is the Russell FTSE index, and then the MSCI. I think right now Vietnam wants to get on the emerging market level for the Russell FTSE. It's got a couple of hurdles. The government, right after the Lunar New Year, the Prime Minister's office said we are motivated and dedicated to moving towards the emerging market. And so I think to that end, and I'm very hopeful that this year we will graduate from frontier to emerging market in the FTSE Russell index. But I have to admit, the MSCI, which is the much larger one, I think there's some statistics indicating roughly $600 to $700 billion worth of NAV in terms of funds that benchmark itself against the MSCI emerging market. If we get 1 to 2% of that 6 to 700 billion, that's quite meaningful for Vietnam. So getting onto the MSCI emerging market is I think is key, but that's going to take a bit of time. Hopefully in 2025 we get onto the probationary list. That'll take a couple years from there, and then Vietnam can graduate to emerging market. But it's going to take a bit of time.
And I think slightly rephrasing a question here. But a lot of faith has been lost from overseas investors from the recent scandals that have been happening around the real estate sector and corporate bonds over the past 2 years. Do you think that foreign investors will look towards this ascension and have some of that faith restored in the market?
I kind of disagree to that because I look at it as generally investors, domestic, international, they have an interest in Vietnam in general. But foreign and international investors have many options. One of which is really strong is the US government bonds. It's paying 4.5% to 5%, right? And that is attracting a lot of capital, right? And we also have another situation where, I talk to my friends in New York and in Europe where they say, look, we have an allocation to Asia and China is a big component of it, but now China is not interesting anymore. And therefore, we're looking at other places and sort of the sort of throwing the bath and the baby together out. And Vietnam and Southeast Asia could be that baby, right? Unfortunately, that's the case. But then you have others that are allocating away from China to India and Southeast Asia, Japan. Japan's at a 30-year high, if you will. So there's money flowing there.
But it just went into technical recession, right? And like the UK, the market's performing very well.
Yeah. So, but my point is that there are options for foreign investors, and the options are quite attractive, right? But when you look at domestic investors who do not have that option, they feel the market is actually pretty interesting to invest in. So the scandals, the arrests, they said, look, this is part of emerging market, frontier market. It's part of the development of these markets, and it's good that these people get arrested for breaking the law. Let's get on with it.
So the question about if getting upgraded to EM would give foreign investors more confidence, good question. I got the point. But I would think more along the lines of us getting investment grade credit rating. And so we did get a notch. We went up a notch this. Last year, and so we're literally just one notch below investment grade now.
I mean, S&P and Fitch and Moody's?
One of them, I'm drawing a blank.
I'm not going to put you on the spot here, but I think that's important because there's.
But addressing those questions, that would be.
That's probably more relevant.
Yeah, more relevant to the more than what index we're in, I think. Yeah.
And I think, look, just going to round off here because we're very conscious we're sort of hitting that 40-minute mark here. So sort of last question here to wrap up here, and the question from one of our participants. The China story, the weaknesses there. We hopefully we're not going to get thrown out with the bathwater, as you said, Andy. But the Vietnamese consumer, tell us a little bit about the Vietnamese consumer, the market here, why we should be excited, and I guess indirectly for us as investment opportunities, what are we looking at in that space? So Mike.
Well, if we think about the midterm, 5 years, 6 years, or this year, next year. Actually, if we look at the midterm, we had discussed a phenomenon that happened a few years ago now, which is that it tends to be when countries get past call it around $3,500 or so per capita GDP, everything tends to be quite robust and accelerate from there. And the types of products that people want tend to go more, a little bit more premiumization, upmarket type products. And I think that's what we're seeing. So that's how I would look at it from sort of a 5-year. Same phenomenon happened in China. Same phenomenon happened in Thailand, et cetera. Once you pass this kind of critical threshold, you're on a upward stability, and also you get this premiumization effect kicking in. So.
No, I think the consumer story is great in Vietnam. Again, like I said, we have 100 million people. They're getting wealthier. They're going to spend money. But again, unfortunately, the larger consumer-based companies, domestic companies, and international companies are competing with each other enormously. And now with the adoption of better technology in terms of payments, delivery system, and comparative shopping, price comparison, much easier. So the consumer is benefiting, but the supplier of services and the supplier of goods, they're competing, and their margins gonna get eroded. Their growth potential is lessened. Some of the larger companies face that issue much more than the smaller companies, and over time, we've invested in companies like Vinamilk. Right? We invested in the early days when they were less than $500 million in value. We exited $12 billion. And you can see over the last 3 to 5 years, their growth has sort of flattened out. right? And other companies like Masan and Mobile World, great companies. We invested in the early days. They've grown up significantly, but now they face, because they're much larger, the ability to grow mathematically is just more difficult, right? And again, facing competitors from grocery stores, from the Central Group, grocery stores from South Korea, Lotte. So a combination of competition and the size of these companies make it very hard to demonstrate the growth that we want as investors in a place like Vietnam.
And I think for us, how we differentiate that strategy, and sort of this slide behind us shows, some of the over 200 investments that we've made over the years. Many of these companies, like you say, Andy, are small, mid-cap companies, but over time, we've been able to grow with them to billion plus or multi-billion dollar market cap companies. And I think that's where the uniqueness of our strategy is, that we're able to be, one, on the ground, two, lift up the hood, do that due diligence, and three, really be active and involved in that growth of these businesses. Yeah.
I think it's very difficult to invest without being on the ground, to be honest. It is a frontier/emerging market. Things are going to happen, and if you're not here on the ground and you don't understand what's happening, you're going to be in the situation of reacting once everyone else has reacted.
Yeah, certainly. So look, I just want to wrap up here. Thank you, Andy and Mike. Here, boots on the ground here in Ho Chi Minh City. Thank you to Kadan for helping us host today. I'm going to hand this back to you, Will. And on behalf of Vina Capital, to your health, prosperity, to the Year of the Dragon 2024.
Thanks, guys. And thank you, everyone, for joining this morning. If you do have any follow-up questions, we can be reached at info@kadancapital.com. Have a good day.